The dollar bulls have finally run out of momentum ahead of a key incoming week with US non-farm payrolls eyed. How is the dollar going to react to this one? Guys, Ken Chigbo back with another E8's market fundamental update. Let's jump straight into this. So, the dollar ended the week in the red after 8 consecutive weeks to the upside. Finally coming under some pressure. And the reason for this, guys, isn't anything on a macro level as such. This seems to be a technical correction. Nothing drastic has occurred on a fundamental level. We had this consecutive run to the upside. And as I always say, markets don't just move in straight lines. We have to have periods of correction, profits being taken off the table. Obviously, there's month-end flows, seasonality kicking into gear. That's another reason as well. 68% in the last 50 years, 68% of the time, dollar has seen some downside heading into and during the month of December. So, a bit of seasonality there. Now, if you have a look here, on a technical level anyway, obviously we ran into that heavy supply at 108 and obviously leaving the door open to another potential drop. Perhaps, obviously, this next support is 105.50 towards 105.00. It doesn't seem to be a massive support, so we could be very much heading down towards sort of the 104.50 area. Now, we're going to be keeping an eye on this week. Obviously, it's labor market data week, okay? And when you look at the figures, they're expected to really soften up. Maybe understandably heading into the end of the year as well, but we're expecting a softening in the amount of jobs. Well, actually, excuse me. Last reading, we had a softening in the amount of jobs being added, okay? Opened at 7.44 million. This time we're expecting slightly better, 7.49 million. We're expecting a softening in the ADP employment change, 166,000 jobs being added. Previous was 233,000. And then, of course, unemployment claims expect to tick slightly higher. Non-farm payrolls, we expected a better number. Remember that number last reading, that was due to strikes on the ports and also affected the hurricane effects. Unemployment rate expected to worsen to 4.2 and the average hourly earnings expected to cool down to 0.3%. So if those numbers do cool, obviously this is going to be further reason to sell the dollar, just an added weight with the seasonality and also the profit taken. It'll be a fundamental reason to continue selling the greenback. So when you look, obviously, some of the dollar peers, for example, euro dollar, obviously staging a rebound there in that latest week. And we're seemingly wanting to break out, obviously, this bearish structure. We've got decent supply to deal with at 106. And we almost look like we're forming a bit of an inverse head and shoulders here. Can you see that, guys? The left shoulder, their head, and the right shoulder there. Obviously, the neckline and resistance anyway around that 106 area, which obviously, if we break that down, guys, there's going to be a lot of room to potentially run in towards 108. I see a lot of space, for it to the freedom to run there in towards 108. And obviously that could tie in with that seasonality aspect of the dollar underperforming in December. Same sort of thing with GU, really staged the rebound as well. We've got a bit of an inverse head and shoulders there. The left shoulder, the head, the right shoulder with the neckline we're taking out, or we have taken out around 27 on the nose. We still deal with 27.50 psychological, and then we're going to have room to run in towards sort of 28.50. And as I say, this is purely technical moves here. Because there wasn't anything drastic that changed for the dollar last week. I'm just bringing up the euro and GP. I know we don't have anything for euro and we don't have anything for pound this week as well, majorly. We've got Bank of England governor speaking there, but otherwise the dollar's peers could certainly have room to take advantage while data is light from their respective side. But then obviously if the dollar data in the United States, obviously data in the United States cools as expected, then we're going to see this dollar move head into the continue to head to the downside towards that sort of 104.50, 104.00 area, while the dollar's peers certainly have the opportunity to take advantage of this. Expect some volatility around the Australian dollar. We do have a couple of key data points, retail sales and GDP figures, as you can see here. Now, with Australia, this is an interesting one because RBA right now, they remain quite hawkish still with policy. They're not entertaining rate cuts. We saw rate cut pricing being shifted from February to all the way back to May in 2025. So obviously the data's been supportive of the RBA remaining hawkish, okay, because there's still inflation risk, labor market's still solid, but we'll keep an eye on these retail sales, okay? Retail sales expected to pick up to 0.4%. And GDP expected a strong number from 0.2 up to 0.5% in this latest reading. That'll be the strongest number we've seen in a while. So, I mean, if that does come out to be the case, look, we haven't seen that since March 2023, then it just further backs the RBA's case of not wanting to raise rates because there's still risks of inflation cropping up there with a strong labor market and potentially strong GDP and strong consumer spending. If you look at Aussie dollar, as I noted with the dollar pulling back and some of the dollar's peers, Obviously, AED has a chance here. We broke this key trending support line, trend line of support that had been supporting the price since October of last year. See, bam, 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 bam. Then we had that breakout a couple of weeks ago, early November, and now we're going for a big retest. Okay, obviously if the data is strong and we do take advantage as well of weaker dollar data and the dollar pullback, the seasonality, this is going to have room to push, and we'll see a correction, okay, at least in towards sort of 6600, which is the next major zone once we break through this trend line, 6600. From there, obviously, it'll be, again, another psychological level up at sort of 67 territory, as you can see up here. But obviously, that is as well dependent on this dollar situation. So also keep an eye on the Australian dollar this week. Also expect some volatility with the Canadian dollar. We do have key labor market data from Canada. Now, on Friday, the unemployment rate was cooler at 6.5%. The expected last reading was 6.6%. And really, the unemployment rate has been good. Okay, it's been good in Canada. Employment change, been a bit hit and miss, not more so miss. But it's one of the reasons why the Bank of Canada remains dovish right now. They've been cutting quite consistently, rather, in comparison to other major central banks. And the door is still open to more cuts. Inflation's cooling, just general slowdown in the economy. So with that being said, when you look at dollar CAD, obviously we've had a key breakout. Remember, we've been talking about this for weeks and weeks and weeks. This key breakout of this range here. Nice little breakout to the upside. Key supply around the 38 region was taken out. As you can see here, the upper part of this range. And then there's major resistance around sort of 3900 towards 3950. Obviously, we slowed down with this dollar pullback at the moment. If this data does worsen, dips will likely be bought here at that key area around 39.50. All right, and then we'll do have that opportunity to, you know how I said before, where we can run to the upside in towards sort of 45, 46, as we've seen there in 2020, and we saw it there in 2016. But obviously, if that data is better, guys, we're going to slip back in this range, you know, likely come all the way back down there, and it'll just be that mundane range again. Okay, so again, still plenty of economic data to keep us excited and plenty of volatility, I'm sure. Other than that, have an amazing and blessed week, and I'll catch you on the next video.